Welcome to Key Stock and Crypto channel. Don't forget to like and subscribe to the channel.
And guys, we have the stock market up. And what was the headline? Strong bank earnings help fuel relief rally. And I told you last week banks would be the focus for the actual earnings. And we had Bank of America come in with pretty good numbers, also saying that the consumer is in healthy position. And we know that is not correct. We know now when they're buying houses, they're paying close to $1,000 extra. When they're buying cars, they're paying an extra $200 to $300 extra. Credit card debt is increasing. And we know in 2023, we're going to start feeling the pain. Now we know the Fed set up these big banks to be in perfect position because we're going to be seeing a lot of consolidation. These banks are definitely too big to fail. Now we have Goldman Sachs reorganization plan, and they will break up the bank's struggling consumer finance business. And we know a big piece of that are those Apple cards. And those Apple cards are just like subprime loan. Now we had Roblox shares up over 21% today. And guys, don't forget that's included in the Ark Invest portfolio. Make sure you go check out that portfolio. But remember, guys, it's about investing. Cathie Woods is looking 5, 10, 15 years down the road. All of Cathie Woods' portfolios are down 24, 18, 15%. But every single stock in that portfolio is set up for the fourth industrial revolution. If you don't understand the fourth industrial revolution, you're not going to understand her portfolio. She's invested in the robots, algorithms, and drones to take over the economy. And guys, on my main channel, Crypto Teacher, in the short videos, I'm showing how automation is going to go through this whole economy. I will be putting a few videos on this channel. But I just want to make it easy for people to just click on and be able to watch 60 seconds on how automation will slowly take over the economy. Now we have the WWE stock hits new 52-week high. And when we think about all the events that we see on television that happen in real life, we also can go to wrestling. I remember growing up, we always had the Russian going against the American. And we know how predictive program works. Now guys, we have butter and margarine up over 32%. And we know when it comes to rate hikes, they've been blaming Ukraine and Russia. But guys, we know Indonesia banned on palm oil exports, which really caused the price to rise. And guys, we know the holiday is coming up, and people like to do what? Bake. And we know they're going to be using margarine and butter. So it's only going to make the price go even higher, and then plus, you're going to see shortages. Now we have News Corp and Fox possible merger. And guys, more consolidation. We know it's only a handful of media companies that own all of your media. They control what you hear and see. And because of technology, guys, we have hearing aids are now going to be available over the counter at Walmart, Walgreens, CVS, and Best Buy. And something that I did not know is that there's a lot of people that are using the clinics at Walgreens and CVS. Times are definitely changing. Walgreens and CVS are going to be a one-stop shop. Now we have the minimum wage workers in New York City need to clock over 100 hours a week in order to afford rent. And as automation starts taking over the economy, corporations are going to be getting this 15% tax next year. We're going to start seeing mass layoffs, and that's going to make the government put in rent controls. And remember, you heard it on this channel first, because we're seeing rent go up just based off of greed. Now, lastly, guys, going over the actual indicators, we had the yields got pushed down early in the morning and then started to rise as closed. And then, guys, we had the dollar down and the VIX down. Of course, the markets would be up, but we saw yields slowly rising. We're going to watch the dollar. If yields stay where they're at now, the market will be flat or down. But, guys, that's all I have for you. Have a wonderful day.
fact, President Xi said that making China great again is his central task for at least the next 5 years. In his 2-hour-long speech opening the party Congress.
Treasury ETFs. Also joining us, my old buddy John Davey. John Davey, founder and chief investment officer for Astoria Portfolio Advisors. Alex, we've talked about single stock ETFs on this show for a long time, the Tesla long and short ETF, for example. Single bond ETFs are really new. You've got a 10-year, a 2-year, a 3-month that launched in August. Tell us, for example, about the 2-year. Tell us how this whole thing works. What are you getting when you buy this?
Sure. So you're getting access to the U.S. Treasury on the run 2-year. It's cash bond. There's no leverage. There's no derivatives. It's quite different than a single stock ETF. And in that sense, it's simpler. It's easier. You get access to what you would buy if you were to go and purchase an ETF. A 2-year Treasury on its own.
So every month, and you see the notes here, there is a new auction of 2-year notes. That happens every month. We know that. And you sell the old one, and you buy the new one, right? So you always have the most recent auction.
Correct.
Now, this is not free. You charge 15 basis points for this, so you're not actually going to get the exact number when the fees are deducted. But taxable events.
No taxable events. So
right, and that's because of the magic of ETFs,
exactly.
Right? Because the market maker actually is the one that does the trading, and there's no taxable event.
Exactly.
Explain that to people.
So when you roll the Treasury from, say, last month's to this month's, if there's a negative event, we would just make a trade. But if there's a positive capital gain, we'll go out and we'll work with the market maker to eliminate that. And since we're going to roll it 12 times a year, we know that's coming, which is good news for us because we can plan with the market makers to get really good pricing when that happens. So you're not worried about, are we a good trader? You're worried more about, are we planning appropriately? And the answer is given the regularity of the auctions, we can do that. And to date, we've done trading at the NAV itself. So the fund hasn't paid for liquidity. The shareholders haven't paid for that liquidity. They've not experienced a taxable event as a result.
Yeah, so John, we've got single stock ETFs. Now we have these single bond ETFs. You're an investment advisor. That's why we have you here. Is there room for these kinds of investments? I mean, where would they fit in, for example, as an investment advisor? Is there circumstances under which you would recommend them, or would you just say, yeah, just go to the Treasury Direct and buy them? Tell us how you use these.
Sure. So in full disclosure, we've been buying it direct from the Treasury Direct, so at our custodians. Maybe we should look at Alex's funds. But, for me as a multi-asset investor that's allocated across stocks, bonds, commodities, alternatives, for me, the game has changed now that, Fed funds at 3, on its way to 4, the 2 years at, 4.3%. I think stocks have competition. So what we've been telling our advisors, our clients is look, you don't have to be long just stocks at this point. You should be clipping coupons vis-a-vis, the 2-year Treasury. I think that's a sweet spot. We've been going, direct to the government. But, perhaps we should be looking at Alex's product. They seem to make a lot of sense. They do the role for you. So effectively, I'm just outsourcing my role to Alex's firm, which we're not opposed to. There's a cost, like you said, 15 basis points. But conceptually, the idea that you want to own treasuries, I think makes a lot of